Good morning, everybody, and this is your S&P 500 day trade setup for today. So yeah, every time we've got back in this area, you can see the sellers have been coming in. Look at all these tails here. So this hanging man that was formed here is basically null and void at the moment because we've got a new high above it. Trend is still down though, in my view. Well, it's clear to see. You can see we are below the moving averages. Trend is definitely to the downside. Don't really have any other setups on the oscillators here. There was a bit of divergence here, but that's really sort of played out. So a big question is this going to hold? So if you have a look at what the bulls are trying to do, bulls are trying to get this inside bar formed and to hold. If they can hold it and get a decent inside bar, or even sort of a bar that closes higher than last week, then they have a really good chance for a reversal here, which would then turn this into a potential flag. Now, you do have a bit of divergence brewing here on the weekly. So between that low and this low, you can see oscillators have got a new high. We've got a crossover brewing above the 20. Lots happening here. Look to the left. It's happened in the past. We spent a number of weeks in this area with a big megaphone formation there. So there is a huge amount of buying happening at the moment. If we start drilling down through the time frames, look at the 3-hour. Trend is still down. There's no debate about that. Oscillators grouping to the upside. Divergence here, which is also continuation divergence to the downside. So we've got bottom divergence, top divergence, different time frames. Very typical of a of a tug of war to see whether we can get a reversal. This range bar is still very much in play, and is in play to both sides. I think the one thing that you need to realize is that there are a lot of traders that have traded this range bar, and they've traded the break, and some of them have traded from the retest of the 50 here. So what that means is there's a lot of stops that are sitting just above this range bar. So they'll be sitting in the region of 38.40 and at 38.60. So there'll be stops sitting up here. So there's a couple of people that'll be sweating. There's a couple of bears that are sweating at the moment. And we then have a pretty big inverse head and shoulders. There's your left shoulder, here's your head, and here's your right shoulder. The neckline could be right where we are now or at the top of the range. I would take it at the top of this range bar. So what you have is a very interesting situation, because you've got the bulls who are driving price up because they know that there are stops above here. So the minute they drive price into there, it's going to trigger stops, which actually just triggers more buying, and price should shoot up. Then you see a pullback, you see structure forming, and that could be the catalyst that the bulls are looking for. So pretty big tug of war that is unfolding at the moment, and that's also why you've got this up and down volatility at the moment. Right, level we're looking for is the hour. Yesterday, for all intents and purposes, was a range day. We have got a bit of a break above the range. I'm just going to use this level just to highlight that. There is your structure. It is pretty thick band of support, or what was resistance, and we're now looking to see if it can become support. We've got crossover of the moving averages, and we held the moving averages as well. So there's a lot going on here. I think I'm a bit reluctant for shorts right now, and I'm also a little bit reluctant for longs, but you'll see now why I say that. So there's our charts yesterday. Really nothing worth trading. Look at the oscillators at the moment, the 15-minute. So I'd be looking for pullbacks onto structure. So this is the first area of structure, and then you've got a bigger area further down here, which is always the one that I'm going to be more comfortable with. And the reason for that is there's my trend line, lines up with the 155. So a retest here to the 155 or close by in this area here at 37.68 would definitely be something which I'd be paying attention to. But nevertheless, this big zone that we've got here could also be an area to pay attention to. So from 3806, or should we say 3800 rather, 3796, so 3800 area, that's what you're looking for. If that gives way, then you're looking for something a little bit lower at 3781 or 3760. So that would be a decent area to buy into this. What you're looking for is pretty much, let's just go like this. So you're looking for this level here at 38.34. You get above 38.34 and build a base, then you are looking for gap close. Simple as that, which is up here at 3900. Gap close breaks the structure, breaks the inverse head and shoulders, and sets up a fairly decent trade to the upside for you. So yeah, everything to play for today. I think 15-minute charts again is what you want to be paying attention to during the US Open. And even that first sort of hour after the US Open, you'll probably still see some fairly decent opportunities. And if we are still trending up, you're looking for the pullback onto structure, you're looking to buy. So if you enter there, you're looking at a stop below the previous swing low. Anything more than 100-point stop loss, you're looking for a smaller position size than normal, and you're looking to take profit at the next level. Anyway, that's it for me this morning. Hope it helps, and we'll catch up with you on Monday. Cheers for now.